So we're just going to continue right off with the Southern Maine office forecast with a presentation from Nate Stevens of the Boulos Company. Nate?
Okay. Thank you all for being here. My name is Nate Stevens. I'm a broker at the Boulos Company, and I'm losing my voice, so I'm hoping to make it to 19 minutes and 45 seconds, because that's how long my presentation takes, but we'll see. But thank you to MEREDA and Shelley for having me back again to present to you the 2019 Southern Maine office market forecast. Before we really get into too much forecasting, we'll definitely take a look back at 2018, where the vacancy rates are right now, some of the trends, significant transactions, and really what that means for the next 12, 24, 36 months for the office market in Greater Portland. I think, as a lot of you know, the information I'm going to present to you today is all gathered at the Boulos Company as part of our annual market outlook. So we just this morning released our 23rd edition of this market outlook. And 23 years ago, it was just a few pages of office data, and it's really morphed into a very comprehensive look at commercial real estate really around the state of Maine. So make sure you pick up a copy before you head out today. So I do not have the presentation down here, but I don't know if that's possible. Be helpful. Anyway, so quickly to go over the market, here in Greater Portland, in part of our survey, we survey 342 Class A and Class B office buildings, and we break that market into 7 submarkets, as you can see here, including medical office space, the largest submarket being downtown Portland. So as I move through this presentation, I compare downtown Portland with suburban vacancy rates, Class A versus Class B as well. And then the total market size right now is 12,400,000 square feet. This is an increase of about 300,000 square feet last year, which is, I think, more square footage than we've added in a very long time to our market size. And here's a list of new construction that happened in 2018 that went towards that 300,000 square feet that we added. And a lot of relatively smaller projects in the 15 to 25,000 square foot range. In Portland, as well as at Gray Road in Cumberland. But really the largest building that we decided to add to the survey this year, it's not occupied, but it will be in a couple months, so we did include on the survey, would be the new WEX headquarters down in the India Street neighborhood for 95,000 square feet. A building that isn't pictured here because it's not technically new construction, but did add quite a bit of square footage to our market this year, would be at 2 DeLorme Drive in Yarmouth, where the owners there decided to renovate warehouse space into just really, really nice Class A office space. So that's about 70,000 square feet that we added, and a few more. A building I sold down at 55 Portland Street, about 18,000 square feet, where City Portland Public Works used to be. We added that as well. But let's get right into the data. So the total direct vacancy rate for 2018 is 3.94%. This does not include sublease space. That is down from 4.4% in 2017. It is the 6th consecutive year with a drop in the vacancy rate from a height of just over 10% in 2012. This is also the lowest vacancy rate we've had since 2002, the last time it dipped below 4%. And so we've really kind of surpassed that whole recovery time in 06, 07, that really short period, and really went back to that strong market in the early 2000s. And we're not really quite back to where it was in 2000, 2001. Those vacancy rates were, for the entire market, as low as 1.6%. So we're not there yet. I don't think we'll get there, and I'll touch on that in a little bit, but still a very, very tight market. And so last year in 2018, there was also about 230,000 square feet of positive net absorption. Really, this is just the amount of space that was leased or absorbed, occupied over the course of a 12-month period, which we use December 1st every year to track our data. And so 230,000 was a little bit less than last year, but in 2016 it was 100,000. Year before that it was 50,000. So still very, very strong market. This does take into account new construction, so obviously that's pushing these numbers up a little bit as well. To kind of also put this in perspective, the downtown Class A office market, very strong market obviously, accounted for roughly 2/3 of this total positive net absorption. And so speaking of the Class A market, this low supply, I talked about this a little bit last year. This certainly continued into 2018. It's especially in the Class A markets. It's in the downtown, over 10,000 square feet, just not a lot of options to choose from. Out of the 170 Class A buildings that we survey, only 24 buildings had any vacancy whatsoever. And then furthermore, in downtown Portland, there were only 5 buildings that had any vacancy. And actually, I think out of those 5, 3 of those vacancies are under contract. So very, very low vacancy rate for Class A downtown. Not quite yet to where we were in '01. That was 0.2%, but pretty close. And then last year, also another headline that really continued into 2018 was that the transaction volume remained low. And this is really just the number of leases over 500 square feet that get signed in buildings that we survey. But it was a steady increase of just the number of deals getting done from 2008, and that's when I started tracking this data. And it just fell very sharply off in 2017 and 2018. Actually, the total number of deals for 2017 and 2018 was still less than the number of deals signed in 2016. So we can't really read into that too much. You have a drop in vacancy rate, fewer spaces on the market, fewer deals getting done. But at the same time, the demand also just seems a little flat. Speaking with a lot of brokers in the market, looking at a lot of listings around town, things sit on the market probably longer than they should. Even a 2,500 square foot Class A vacancy in downtown Portland still just is not getting as many showings as you'd probably expect with such a low vacancy rate. So it's a very low vacancy rate, it's a fairly flat demand, it's a pretty well-balanced market right now. And so when you have these drops in the vacancy rates and a decrease in the number of transactions, it's really those large deals that really shape the market. It's the large lease transactions and the large vacancies that really shape these numbers as we move through. And then lastly, we are in the middle of a building boom in downtown Portland. I think maybe some of you from Boston and New York will laugh at that when I show you the numbers later, but relative to Portland and our history, we are most certainly in the middle of a downtown building boom, a lot of new construction, and I'll go through those here in a little bit. So here, this is a slide just really comparing downtown vacancy rates and suburban vacancy rates, as you see here, for Class A and Class B. And starting in downtown Class A, as you see that dark blue line on the left-hand side of the slide, that falling from about 3.5% down to just 1.04%. So very, very low vacancy rate for downtown Class A. And then you look at Class B, falling from roughly 9.8% down to 8.5%. So pretty good drop in the Class B vacancy rate downtown. I think that number is a little misleading. Actually, it is misleading. There are a couple transactions that happened last year, I'll talk about in a minute, that were really the reason for this drop. Otherwise, the Class B vacancy rate downtown stayed fairly flat. There wasn't a whole lot of activity. I think what's interesting with the downtown Class B market is that we loosely track asking rates across all markets, and I've been tracking them since 2009. And the Class B asking rates for office space have been, $17, $18 a square foot over the last 6 or 7 years. Well, last year they increased by more than $2 per square foot. It went from $18 a square foot up to over $20 per square foot. So I'm not sure what that says about the market, but it says a lot about landlords' confidence right now in the market. So it'll be interesting to see how those vacancy rates and the activity really responds to that increase. And this is really due to, I think, landlords putting the money back into these Class B buildings. You have Jim Brady at 80 Exchange Street above the grill room, really transforming the upper floors of that building, Class A finishes throughout, and pushing those lease rates in that building well over $20 a square foot. On a little bit of a smaller scale would be 22 Monument Square, building I sold last year, and that landlord going in, redoing the lobby, fixing up the spaces upstairs, and really pushing that lease rate a couple dollars more a square foot than that building was historically getting. And then over into the suburban market, what's interesting is that you see a spike in the Class A vacancy rate and a pretty big drop in the Class B vacancy rate last year. And with Class A, this is only the third time that the Class B market has outperformed the Class A market and suburban markets over the past 23 years. I'm not sure what that really says. It usually happens during recessions, and which we're not in. So I think it's interesting that's happening now, but really, we have relatively small market sizes when you look at the suburban market. And there were a couple large vacancies that came on the market last year, Class A, that we're just simply not able to absorb. One of those would be the Bottom Line Technologies, moved out of a building on Gannett Drive. That's a 34,000 square foot building that's vacant, as well as that building I mentioned at 2 DeLorme Drive. which is about 70,000 square feet still vacant. So, those two, and there weren't the large transactions over 10,000 square feet in the Class A market that we typically see every year. So really, the activity in the Class A market in suburban wasn't able to keep up with those vacancies. And then conversely, in the Class B market, there was a significant vacancy of about 50,000 square feet on Davis Farm Road in Portland, but you still had this big drop in the vacancy rate last year. And I think that's really just due to those small to medium-sized deals, maybe 5, 10, 15,000 square feet. I'll show you a couple of them, really kind of pushing that vacancy rate down. And it's really not any specific submarket. I think, as you saw those 7, I think overall it was a common drop in the suburban market. I do need to give a shout out to Westbrook though, because right now there's 0% vacancy in both Class A and Class B buildings in Westbrook, which is really cool. Just a couple years ago, it was 28, 30%. So good things happening in Westbrook. Plus they have a spinning ice disc, so. Actually, that's my prediction. That'll get spinning again. If Phil Spiller has anything to do with it, it's going to get spinning again. So here's some of the deals that significant transactions will start in downtown Portland that really shape those trends. The largest transaction by far, I think the largest transaction leased office transaction we've ever done was Vet's First Choice Covetrus leasing 170,000 square feet in the India Street neighborhood, spurring new construction of this building. Really, really great deal done by Greg Boulos in our office. And I'll talk more on this building in a few slides. And then moving through as well at One Canal Plaza, Stone Coast Fund Services leasing or expanding and leasing 42,000 square feet. I think what's interesting about this deal is that they also have a significant renewal across the street at 2 Portland Square of about 32,000 square feet. So, right now in the Class A downtown market, your options are very limited. As I mentioned, very few vacancies downtown. None of those vacancies I mentioned are over 6,000 square feet. So you just don't have the large blocks of space. If you're a tenant looking for 10,000 square feet downtown, your options are new construction, wait a couple years, move out to the suburbs or lease space across the street. And Stone Coast Fund Services seems to have committed to this split location plan where they have committed to roughly 75,000 square feet between 2 buildings across the street from each other. And then lastly, at 16 Middle Street, Guideline leasing just over 10,000 square feet. There was another lease here just under 10,000 square feet as well. Marcus Clegg leasing space there and essentially filling that building, which was added to the market just a couple years ago. And so significant renewals downtown, as I mentioned. You have Stone Coast Fund Services, and then as well 2 other, all of these in Class A office buildings. You have Amec Foster Wheeler, about 42,000 square feet at 511, and then at 100 Middle Street, Morgan Stanley renewing for 22,000 square feet. And moving out to the suburbs, really only 3 significant transactions to speak of. Only 1 Class A significant transaction. It was Bottom Line Technologies leasing 13,000 square feet, in which they moved out of that building on Gannett Drive. So really, creating 21,000 square feet of negative absorption because there's 34,000 square feet available on Gannett Drive. And so really, deals like this having to do with that drop in that vacancy rate in Class A suburban last year. And then for the last 2, these are Class B buildings, Wex leasing 13,000 square feet on Darling Avenue again. And then really great deal at 222 St. John Street, Maine Health leasing over 100,000 square feet, master leasing the old railroad building. They're not occupying the entire thing right now, slowly grow into that. And that building was mostly full, so it's only resulting in about 18,000 square feet of positive absorption for that suburban market, but obviously having a hand in that drop in the vacancy rate. And then plus, there are tenants that will be moving out of this building as Maine Health grows into it, possibly going into other Class B buildings in the market, so certainly helping the Class B market overall. And there were a number of large, significant renewals in the suburbs. I think I even missed one here at Davis Farm Road, Fairpoint renewing for 50,000 square feet. But you have 3 on this slide. We have 3 on this slide. I won't go through all these one by one, but hello. There we go. But all Class A office buildings, just limited options to relocate. I think that's changing. As I mentioned, some of those Class A vacancies coming up, more on the horizon. I'll touch on that in a bit. So every year I touch on significant sale transactions in Greater Portland. And most of the time, they are fully leased investment products that really don't have any effect on the overall office market. But these 2 in particular did. And when I talked about that drop in the Class B vacancy rate downtown, this is really the reason. So you have 50 Monument Square and 477 Congress Street, the Time and Temperature building, which sold at auction last month for $9.3 million. The time and temperature building in downtown Portland has been kind of a huge hole of vacancy for the last 3 or 4 years while it was bank owned. There's about 60,000 square feet of vacancy. So that building is sold, and while plans have not been made entirely public of what's going to happen there, we're pretty sure it's not going to be Class B office space. So we've removed this building from our survey downtown. So that's basically erasing 60,000 square feet of vacancy for Class B. And on a smaller scale at 50 Monument Square across the street, we sold that building last spring, and the owners of that building are transforming 3 vacant office floors into residential. So we've removed those 3 floors from the office market, eliminating 20,000 square feet of vacant office space. So really, these 2 deals having a hand in that drop in the vacancy rate. And then really speaking of Monument Square, I think with these 2 transactions, next door, 465 Congress Street, Class B office buildings under contract, there's about 30,000 square feet of vacancy there. From what I hear, the new owners really want to put the money into that building, dress it up, fill it up. So I just really see great things happening at Monument Square these days. At least that's what I see happening in the next 12 months. And historically, I think last year, Monument Square alone made up 50 or 70% of the overall vacancy in downtown Portland. So we're really going to see that, I think, start that change here moving forward. And this is a list of other significant transactions in Greater Portland: Class A buildings, Class B buildings. Really, the point is that if it's a performing asset, it's going to sell. Definitely I think the interesting one would be 75 Washington Avenue. The transaction was actually much larger than this, but I tried to pull out the office piece of it and what that related to price-wise, but that was an off-market transaction. Maine I building at 15 Lowell Street, 1685 Congress Street selling as well, which is an interesting deal. And then 125 Scott Street, the Roundhouse deal, selling for $11,500,000. So I don't really see this demand going anywhere, moving into the new year. I think there was a little concern maybe last year that rising interest rates would have a little bit of effect on the investment market, but there are a couple big ones under contract right now, such as 465 Congress I mentioned. You have 120 Exchange Street, 400 Congress, which is a 120,000 square feet Class B office building for roughly $20 million. So that's a big transaction happening. I think that building received over 11 offers on it in the first couple weeks. So huge demand out there for that product right now. So this slide I've brought up the last couple years. Really, this is just the relation of low vacancy rates equals new construction. So just want to touch on this building boom in downtown Portland real quick. And so really, you have the Class A downtown vacancy rate over the past 23 years, the green pieces being those chunks of new construction every time the vacancy rate falls below 4%. So right now, we are obviously in the midst of a building boom. We are in one of those green squares. The vacancy rate fell back down to 1% last year. We saw new construction. We saw a commitment from a tenant for new construction, which is the Vet's First Choice deal. And so in this 3-year period, we've added more square footage to the Portland market, I can positively say, at least since 1960 and probably within the last 100 years, of 341,000 square feet, which this is just in downtown Portland. That does include the Vet's First Choice deal, which I included because it's under construction. But I think moving forward, it's going to be interesting to keep an eye on that Class A vacancy rate. I don't think we're going to see much of a change maybe in the next 12 months or 18 months, but there are several significant Class A tenants that are in downtown Portland right now in towers that are looking for space. And they're 30, 40, 50,000 square feet. And if just one of those tenants were to relocate, then that's a lot of space for this market to absorb, 50,000 square feet. It could take 12, 24 months. And I think with that, you will see maybe a slight uptick in the Class A vacancy rate, maybe 2-3 years down the road. The question is, does it really push high enough to maybe halt any construction downtown? And I don't think so, but we'll keep an eye on that. So go through these new construction projects real quick. Obviously, I mentioned the Vet's First Choice Covetrus building, 170,000 square feet, won't be completed until 2020. So what's interesting is that we're actually not adding any space for the first time in 3 or 4 years to downtown Portland, as this building's under construction, won't be finished till 2020. Moving on to some other buildings that are a little farther down the road. So Portland Foreside at 58 4th Street. I think they have a commitment or pretty close to a commitment to be able to move forward on a 120,000 square foot building. At 104th Street, I just heard from Steve Bauman this morning that this building is now 100% committed and will probably be breaking ground in the next 3 to 4 months. So that's another project that we can probably count on for 2020. And these other ones don't have committed tenants, but they are ready to go. All you need is that tenant for probably 50%. It's easy to find, right? So we'll see. Any one of these could take off this year. The interesting project would be 385 Congress Street, which is just coming out. Plans for this are just coming out. And this is the Portland Press Herald printing plant, which is next to City Hall. It's about 150,000 square feet of just office space, in addition to residential, retail, parking garage. Very big project for Portland. So we'll see, keep an eye on that one as we move forward. And these ones are just a little bit farther down the road, not actively being marketed. Well, Johnson Road is, but with the vacancies in the Class A market coming up next year, I'm not sure we will see any new construction out there, but you have Portland Square lots. There's a new hotel that's being planned. Maybe an office building could happen in the next couple of years, as well as any of the J.B. Brown lots along Commercial Street. So where do we go from here? Looking back at 23 years, I'm actually going to make the bold prediction that the vacancy rate next year will be exactly 4.4%. I can say that because none of you will remember that I said that. So I don't know, I'm looking at some of the vacancies that are popping up in Class A next year. And you've got the Unum building in Portland, which right now is being marketed. There's several deals in the works. They're vacating that building next year. It's 300,000 square feet. So, you know, even if you have a ton of activity on that building, it gets half leased, that's still a large chunk of space that's coming on the market next year that I just don't think we'll be able to get absorbed within the next 12 months. In addition to that, WEX, the building that they're relocating out of near Clark's Pond, deals in the works, but you never know what could happen. And there are a few other vacancies in that 10 to 20,000 square foot range to keep an eye on that really could push that back up. So I do think we will have a jump up in the vacancy rate next year, kind of what Britt alluded to earlier. This doesn't mean that it's just going to keep climbing until we get back over 10%. I think maybe it's just a little correction. Maybe it'll level out a little bit in the low to mid 4% range. All right, so just kind of touch base on conclusions a little bit. I think the demand's going to remain quiet. I'm not seeing anything, at least in the last 6 months or even here in 2019, that's really going to change that any. So I'm not sure that's going to have too much of an effect on the 2019 market. And I think it's going to stay fairly quiet. I think landlords need to put the money into the lobbies, put the money into the spaces to really get those few tenants that are out there. Downtown vacancy rates, I think, are going to stay flat. You know, there are some interesting projects that are on the horizon in downtown Class B that maybe could push that vacancy rate down a little, but you still have to find the tenants. And so I think what's interesting, too, is to look at the downtown Class A. You know, what is that outlook to 3 years down the road if there are any large movements in the marketplace with some of these tenants? So vacancy rates will increase in the suburban market, as I mentioned. How high they go, not quite sure, but you saw that jump up in the vacancy rates for Class A this year. They'll probably go up a little higher, pushing the overall vacancy rate up as well. High demand for quality investment buildings, as I mentioned, 2 already, a couple more rumored from what I hear on the horizon, which will be interesting to see what happens with those. And then we will get 2 to 3 new office buildings in downtown Portland. Not saying they're going to get built and finished, but at least tenants committed, planned, permitted, ready to go, at least that we'll see in the next 2 to 3 years. So thank you to Abigail Henderson in my office for helping me put this presentation together. I'm glad my voice held together, and thank you very much.